Welcome to the Private Lenders Podcast with your host from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. We do appreciate it. One quick reminder, if you haven't done so already, inside hardmoneymastermind.com, we have recently released the submit for funding for private capital deals for all members to use. If you find yourself in a position where you want to broker a deal or maybe share one or you're short on funds, whatever it may be, use the resources of the entire mastermind group by submitting that. And when you're inside the mastermind, you'll see it in the left column. Okay, let's get into today's show. We're talking about portfolio management tips. We recently had a conversation with the Inner Circle group that we do periodically in between our in-person meetings. And we were talking about a few different things that members, including us, are doing to effectively manage their portfolio of outstanding loans. And we're going to dive into a few of them.
Yeah, let's start with collecting monthly payments or tracking borrower activity. Now, obviously, it's important to know what's going on inside your loan at any given time. And sometimes it potentially could be hard to determine that. I know some hard money lenders and private lenders, some collect monthly payments, some defer payments to the back end, some do prepaid interest, some collect money and put it in an escrow account and then pay it on behalf of the borrower. There's lots of different ways. I'm not going to judge you of what you think's the best or worst based on your situation. But I think both Chris and myself can attest that you want to make sure you're aware of what's going on inside the deal at any given time. And in our experience, there's no better way than to make sure the borrower's you're collecting payments monthly from the borrower, because, hey, within a 30-day time period, if there's a potential issue. Because I'll give you an example. Today's early February, and we collect payments monthly, right? So we're in the process of doing our monthly default meeting, and part of that meeting is going to be who is behind, who hasn't paid their January 1st payment, which is about 30 to 35 days overdue, right? So we'll have a list of the folks that have not paid their January 1st payment yet because they're past due, they're overdue, and that's a big, red check ticker of, okay, let's get on the horn with some of these borrowers and figure out what's going on inside their project to see if it's something that we can, in essence, fix before it turns into a major problem.
Yeah, let's keep going on payments for a second. So yeah, like we were saying, we like payments because it's just another way of keeping the borrowers accountable to the lender, right? And when we're talking about how we collect payments, so for anyone who is using a loan servicing software like the Mortgage Office or Mortgage Automator, you have the ability to automatically pull payments by ACH, right? There's two ways to do it. One, you can do it in a batch. The other one, you can do it manually one by one. And the batch is definitely the way to go. So let's talk about payment dates real quick. In all likelihood, everyone's notes says that the payment is due on the 1st of the month and they get a grace period to the 5th. And then after that, there's a late fee. That's pretty standard setup. But you can, for the ease of use for the borrower, to make life more convenient for the borrower, you can adjust those payment dates. They don't have to be the 1st, especially, a lot of real estate investors have income properties, right? They have rental properties, they have commercial, and they're expecting every month payments from tenants on a similar time frame. They might not all show up on the 1st. It might not be the most convenient thing in the world to have their payment to you pulled automatically on the 1st. So what we do, we have the majority of them on the 1st, and we also have an ACH batch date that we do on the 5th, and we also have one on the 15th. We definitely prefer the 1st and the 5th, but we do have, we see the report every month. It's probably about 15 or so loans on the 15th. And to be honest, we're fine with any of it. As long as you're on ACH automated payments, we're okay with any of those dates. They're going to be made every month. They come at different times during the month. Not a huge deal. It's just more important that the borrower doesn't say, oh, I don't want to do ACH at all because the 1st is not convenient. That's what we're trying to avoid. And we do have mandatory ACH, and there are really, really few exceptions. We started in the middle of last year to require the ACH form be filled out at closing with the document package, with the loan doc package. So just a few tips there related to payments, and trying to get as many of them in on time as you can.
Yeah.
Right?
I mean, that's an important part of it, and might be somewhat overlooked, but it's important for the borrowers to make payments. And I know it's, there's some lenders that defer payments. There's some lenders that, whatever, they do some workaround. I mean, listen, if you're a real estate investor, who wouldn't want no payments, 100% financing, cheap terms, right? Like, yeah, that's great. But at the same time, like, you need to wear your underwriter, capital investor hat on, and make sure you create the best product and the best setup for loss mitigation for your company. And collecting monthly payments is not an unreasonable way to do it. I mean, a lot of these investors were used to using institutional back capital over the last 10 years. Like, they're not deferring their payments, they're making monthly payments. They go to a bank,
Yep.
they're making monthly payments. Allow them to do it. You can track everything. The next thing is construction. If you're doing a renovation loan or a rehab loan, or construction loan, and you're doing draws requests, an easy way to keep tabs on the borrower is, when did they take their last draw? For instance, let's say you did a loan of whatever, $60,000 construction holdback in October 2023, and now we're in the month of February 2024, and you still have $60,000 in your rehab reserve. Like, that's an issue. You need to get on the horn with that borrower immediately and figure out what's going on with that project. It might be nothing. Chances are it's something, right? And when I say it might be nothing, maybe the answer is, hey, listen, I thought this project was going to be done by now, but I couldn't get the permit in, or whatever the case is. You need to know what's going on, right? You need to know what's going on inside the deal at all times. So pick up the phone and get in touch with them and figure it out, because no news is bad news. It's not good news.
That's a good point.
So make sure it's going. And again, monthly payments is the easiest way to do it. The second easiest way is construction. Look at your construction holdback, and look in your software or on your Excel spreadsheet, if you're not using the software, to figure out how far along they are in the process.
Yeah, so it's not an exact science. Keeping an eye on time frames and the trust balance or the construction escrow amount. I'll tell you the way we do it. So we have a once a month meeting called a default meeting, and it's more than just a default meeting. It's really a portfolio management meeting, but that's what we've called it. So anyway, we do that around the middle of every month, and there's a couple of things that we're going to cover. So right now it's the first week of February, and in the middle of February, I'll schedule a default meeting with our team, with our originators and portfolio manager, and we'll be taking a look at a few things. Like, one, talking about payments. So we're not so much going to worry about the February 1st payments in the middle of the month, because they're only 2 weeks late. Most of them will be paid at the time. Some of them will be late, and that's just part of it. But we will be looking at the January 1st payments that weren't made, right? Because at that point, they're starting to walk that line of, it could be a default, it could be fine. And what all of the originators do during that time, and we're going to get to the good cop, bad cop scripting and process in a second here. But leading up to that meeting, the originators are going to be working with their clients. These are their relationships, to get those payments in. It'll go something like, look, we're having a default meeting next week. You definitely don't want to be on that list. Make that January 1st payment, because technically you're outside of that 30-day window where default could be triggered. So do everything you can to get that payment in. Can we pull it via ACH? Like, what's up, right? And get a handle on that situation, because we will be, if somebody's like, look, the originator talking about their client is like, they're going to get that payment in, they're finishing construction soon, not a default situation, then cool. No big deal. Most of them are like that. Many of them are like that. And then sometimes it'll be like, yeah, they're 45 days late and they're not returning my call. It'll be like, okay, that's not a great situation. We should move forward with the default letter, right? And so that's something that we would do at that time. We change some stuff around in the loan servicing software to the default rate, add a charge for the legal fee, send it over to the lawyers to get that default letter out ASAP, because oftentimes that attorney letter is going to really get their attention, more so than the lending company bothering them about their payments. And so I would also advise to have your attorneys mail that and email it. because mail's slow. Who knows if it's going to the right address or if they're even checking their mail. And so definitely do it both, because that email is instant, right? As soon as that payment or that default letter is done, it's going to hit their inbox, and you're going to get a lot of responses on people who are going to, try to make good and stay in, good status on a performing loan. So another thing, going back to the construction that we were talking about before and monitoring that, we cover that at the default meeting too. We take a look at each portfolio from the different offices and look at those balances and look at the last time we did a draw and see if we have any stalled jobs that we need to address, right? Like Jason was saying before, if it's, 4 or 5 months, they haven't done a draw, we got to contact them and look into that, because something might be up. Could just be permitting or some kind of non-issue, or it could be a real stalled job, which, in essence is another version of a default.
Yeah, it's important. It's important to know what's going on at any given time, and there's no other way to sum it up. I've talked to too many lenders, especially lenders in the mastermind group, when they ask our opinion on a few things, and I'm like, "Well, what is the borrower trying to do? Like, what's going on? You haven't got a payment in 6 months, or they haven't done any work in 6 months." They're like, "I'm not sure. Like, I can't get in touch with them." Right? So it's like default immediately. Like, you can't just or they promised me this. Well, they promised you something 3 times, you didn't get it. Default immediately. And I get it. Nobody wants to foreclose. Nobody wants to default somebody. Everyone wants their loans to perform. That's important. But the inevitable will happen if you allow it. So follow your process, put a process in place of when you send out defaults, when they're actually in default, when you actually pursue foreclosure, and stick to it. And if they cure it, they cure it. But you got to put a process together so you don't get taken advantage of. Lastly, sometimes we do a good cop, bad cop situation, especially if you're a one man or one woman operation and you don't have a partner or something. And you're like, well, I want to do the right by them, but I'm in a tough situation. Just, an easy one is, hey, my controller or my bookkeeper just told me that we didn't get a monthly payment in from you last month. I need to get back to her today. When do you think we're going to get that payment in? Right. You can use a script like that. Or, hey, my attorney told me, my attorneys told me I have to default you because you haven't made a payment in. Blame it on the controller. Blame it on an attorney. Blame it on your business partner. Blame it on whoever. If you want to be a sissy about it and don't want to just take it yourself, which you can do it that way, but you got to have.
I think you accomplish more with the good cop, bad cop, because you also want to maintain a good relationship as the loan originator with a client who might be in a perfectly fine situation, just needs to catch up, and someone you want to lend to again. A lot of those are in those situations. Just because somebody missed a payment doesn't mean they're blacklisted by any means. And this allows you to keep that good rapport with the borrower that you've been working to build, and at the same time, get your loans, do everything you can to get your loans to perform. And just to reiterate a little bit what Jason was saying, in our operation, the loan originators can easily use me as the bad cop because I manage our defaults, right? And then sometimes I'll even use the attorneys, like we were saying before, but that's good scripting to be like, look, you got to get this in. The attorneys, if it hits 30 days late, they're going to run with a default letter. That rate's going to go from $12.99 to $24. You don't want to be in that spot. So get the payment in. And that's effective. It's not 100% effective. Sometimes people just are out of money or whatever the situation may be. But hopefully these portfolio management tips you can insert in your business and get that performance as high as possible. It's what we're all looking for. Anything we missed? Anything we missed in terms of management tips?
No, I don't think so. But if anyone has any questions related to this topic, just comment below in this video and one of us will be happy to answer it. Or, chat or comment in the Hard Money Mastermind group. We're always in there answering questions, and the community's answering questions as well. It's not just us.
Good stuff. We'll see you guys inside hardmoneymastermind.com and right here on the next Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.